Are going to continue the conversation. We're going to bring Mike Novogratz onto the stage. He's going to be joined by CNBC correspondent Mackenzie Sigalos, and they are going to continue the conversation about the evolution of institutional crypto. Please welcome them to the stage. Thanks so much. Hey, Mac. Good to see you.
Yep.
Hey, Mike.
Thank you.
Yep.
Hey guys, I'm Mac. I'm here from CNBC with Mike Novogratz. I want to start with what has felt like whiplash in terms of the spot Bitcoin ETF, the spot Ether ETF. Last week we get what many viewed as a surprise decision from the commission to approve this rule change that paves the way for spot ETH ETFs. And my question to you, I've been talking to different people, different applicants who have been vying for this, and they say that they went from silence from the SEC to this. How surprised were you last week?
Listen, I think there's been a seismic shift in the crypto political landscape in the last 2 weeks. And it started really with kind of a bizarre missive from the White House that said, President Biden is going to veto the overturn of SAB 21. And when you think about that, you've got a president pre-announcing he's going to veto an arcane accounting rule that the SEC had filed. You're like, why? And Donald Trump, over the savvy political machine, says, wait a minute, I'm going to be the crypto president. A lot of people like that stuff, Bitcoin. I don't like it so much myself, but I tell you, you like it, I'm going to support you. I'm going to be your president. And, for years, I've been in DC trying to tell people this should be a bipartisan issue. It needs to be a bipartisan issue. Telling my Democratic friends, guys, don't keep poking the beast. And that was the day the beast got poked, right? I tweeted, wow, the Democratic Party has decided they're going to be the party that doesn't like dogs. Right? There are more crypto owners in America than there are dog owners. And a lot of them are single issue voters. In that week, that was it. You could see it on crypto Twitter. People got fierce. It almost became a purity test. If you don't vote Republican, you're not really a crypto guy. And the Democratic Party heard that. And so what did you see? First you saw 9 Democratic senators cross the aisle on SAB 121, which is really an arcane accounting rule that will allow TradFi custodians into our space, right? And so that's a big deal, including Senator Schumer, the head of the Senate, and more importantly from New York, where there are a lot of crypto jobs. The same day, or 2 days later, the SEC says, well, calls up all the ETF applicants, get ready. I don't know what happened. It certainly feels like someone from the White House called Mr. Gensler and said, dude, you got to change your stance. It's the only thing that logically makes sense. Of course, I wasn't there. I can't tell you for sure. But now we've got an ETF coming.
Yeah, and it is this. It's meant to be an apolitical body. A lot of people feel that it could have been politically motivated. You mentioned SAB 121. Then meanwhile, last week the House passed FIT 21. You had more than 70 Democrats join for that.
So, just so people don't think all Democrats hated crypto, they didn't. I'd go to DC all the time, and there was plenty of Democrats that understood it, that liked it, and believed we need good regulation for our country. Guys like Richie Torres or Jake Auchincloss, even Hakeem Jeffries, the Democratic leader of the House, completely got it. Elizabeth Warren had a huge sway over crypto politics. And if anything happened in the last 2 weeks, her party said, Elizabeth, enough. Now you've got us in hot water with this giant group of crypto voters in a very tight election year, and we don't appreciate it. And so in lots of ways, you can look at this as a giant rebuff of Elizabeth Warren. It's great for all of us because it has gotten the wheels of movement going forward, right? We passed FIT 121. That's a great start. That's now in the Senate, right? The way DC works, right? The House passes bills and the Republicans and the Senate makes laws. And so the most important person right now is Debbie Stabenow, the senator from Michigan, right? Because she's the chair of the Ag Committee, where this bill is going to be, the Senate version is going to be built bipartisanly out of the Ag Committee. And if that gets through, those two can decide. Schumer will put it to a vote, and if it gets through, it's going to be law.
But playing devil's advocate here, yes, I hear what you're saying about, okay, it's becoming less of a partisan issue. We're seeing more cooperation. We're seeing Dems come over, not associating or aligning themselves with anti-crypto stances. But is this just a reflection of the fact that, when Trump came out as a pro-crypto president, you saw $50 million more go toward his campaign? Is it just a reflection of where the money is going?
It's more like $150 million on its way to $250 have moved into crypto super PACs. Now, those super PACs are supposed to support crypto candidates, and they have. Right now, in the minds of the guys running the super PACs, the anti-crypto people in vulnerable races happen to be Democrats. And so they became de facto Republican PACs. And yes, this is a direct response. That's how politics works.
Yeah.
The Democrats, and I kept saying to my Democratic friends, how stupid are you guys going to be to take a issue over a technology and lose some elections over it? Mark Cuban started tweeting that early on, and lots of influencers. And listen, the way politics work is politicians want to get reelected, and they listened. And that's really a good thing for all of us.
Have you donated to any of the 3 campaigns?
I have donated to lots of candidates. I broadly am a center-left Democrat. Now I'm calling myself a radical centrist. But I've donated to Republican candidates. I think Senator Hagerty was on stage here or somewhere else. I love Senator Hagerty. He's sharp as hell, but he also really understands our industry. Tom Emmer is a good friend of mine, and so I got friends on both sides.
What about Trump? Have you given to the Trump campaign?
I have not given to Trump, and nor will I.
Okay, so you mentioned the fact that you spent a lot of time on Capitol Hill. You've been guiding the way that legislators think about crypto policy. How instrumental were your conversations to kind of swaying what were people saying behind the scenes? We're talking about FIT21, SAB 121. How much convincing did it take?
The wonderful thing about a decentralized movement is it's decentralized, and it takes an army, right? Brian Armstrong's got, I think, 16 people in D.C. constantly pushing and lobbying. There are tons of people who run crypto companies who have a vested interest, and people that don't, who are sending in letters that are trying to get to the right players. And so I'd like to think Galaxy was part of that, but by no means can we take a lot of the credit.
I would be keen to hear some of what happened behind the scenes, but I want to move on now to ETFs. So collectively, the first 5 months of trading, we're looking at roughly $58 billion across all of the spot Bitcoin ETFs. I went through all those 13F filings. I was looking at which Wall Street banks, which hedge funds newly had exposure to Bitcoin through these spot Bitcoin ETFs. And there aren't a ton. And those who do, I think Morgan Stanley has something on the scale of 270 million collectively. And I was reaching out to these banks and asking them, is this an endorsement of Bitcoin as an asset class? And resoundingly, the kind of response that I was hearing is it was more a reflection of their wealth asset management clients wanting this. So they were responding to what their customers wanted rather than backing the asset itself. You come from Goldman Sachs. You talk to institutions all the time. What are they saying?
Listen, the 2 biggest things that will shift the landscape in the US around crypto is this accounting rule being passed or being overturned and the market infrastructure bill. Right? What does the accounting rule do? It allows Bank of New York and State Street, the world's biggest custodians, to start custodying crypto. And the market structure bill, not good for me, because the day after it passes, Citibank's going to be calling the headhunters to call for my employees. But what has stopped Wall Street at large from being a participant in the digital markets is regulatory uncertainty. It's the fear that the Fed is going to call and say, no, you can't do that. The fear the SEC is going to be down their throat. The fear that they're going to get a Wells notice, just like almost all the crypto companies. And so as that goes away, you will see a stampede of Goldman Sachs and Morgan Stanley and Citibank and Jefferies and everybody else into this space. I'm hoping, in some ways, I hope it gets delayed a little bit, allows guys like us to build our muscles a little stronger, because that's really when the big show happens on who's going to be the service providers to the universe that comes in. And so, yeah, the first movers are wealth management clients who said, I want some of this. And just so you know, places like Morgan Stanley, they need that ETF to season for a little more than 3 months before their salesmen are even allowed to pick up the phone and call and say, hey, guy in the white hat in the front row, I think you should put 2% of your portfolio into Bitcoin.
Yeah.
And remember, people don't just buy Bitcoin, they get orange pilled. Bitcoin is sold, right? There's an army, all of you are part of it, that convince someone of the merits of crypto, of Bitcoin or Ethereum or Ripple if you're Brad Garlinghouse, right? This is a really interesting point. Because it's a new asset, it almost is always sold, right? Larry Fink got orange pilled. He didn't wake up one day and say, God, let me become a Bitcoin firm. There was a concerted effort by 10, 12 people to convince them of why Bitcoin was important for the future. And so now you've got hundreds of salesmen at Morgan Stanley and the other, RIAs all around America who are learning the story themselves and picking up the phone and telling their clients, put 2% of your portfolio, what are you scared of? Right? That conversation is starting to happen. This is a 10-year conversation, not a 10-week conversation.
Do institutions like anything about Bitcoin besides the fact that its supply is capped at 21 million coins?
There are two things that people really like. We all know there are $45 trillion of baby boomer wealth sitting in the registered investment advisors. That's a giant amount of wealth. It's the single richest age group in the history of the planet, and they're gonna die. Just like Charlie Munger passed away, God rest his soul, and that money is going to younger people and younger people like crypto. So as we see this generational shift of wealth, it is shifting into a group that is really happy with digital assets, that is comfortable with digital assets, that they think this is their asset class. And so that's the one thing. And the second is we have a government that can't keep its pants on. Like we have a government that can't stop spending money. On the left and on the right, Congress is failing us as citizens. They are spending too much, and that is the narrative for why Bitcoin goes higher. The same narrative for gold and silver is the narrative for Bitcoin. That's not going away.
The fundamental difference I see between a spot Bitcoin ETF and a spot Ether ETF is that with Ether you can stake it. And if you have the kind of response that you've had to the spot Bitcoin ETFs, you're looking at $60 billion worth of Ether that you can't legally stake anymore. Is that a problem that you're solving for or starting to think ahead on?
No, listen. You get a yield by staking your ETH. And so, you'd rather get a yield than not get a yield, right? A bunch of you probably have cash dollars in your pocket. Raise your hand if you've got any cash money in your pocket, right? That's earning 0%. If that money was in the bank, it'd be earning 5%. And so you're making a non-economic decision to carry something for liquidity. When you stake your ETH, you tie it up for a while. And so there is some cost to the illiquidity. And I will stake my ETH, but there'll be plenty of people just to get the exposure that will participate in the ETF. I would argue that within 12 to 24 months after the ETH ETFs without staking happen, they will change the rules and allow staking.
I believe that Galaxies is the second biggest validator for Solana. And to the point of the last panel, Zach and Brad were talking about the question of whether an XRP or a Solana spot ETF could be next. Any thoughts on this?
I would think this has started a trend. And the big token ecosystem, Solana, now being kind of the buzz of the last year, right? Ever since the FTX estate disposed of it all, right? It's got unbelievable buzz and unbelievable growth. My guess is that's going to be the next one that does an ETF. And yes, because it's the same process. How do you take this community and widen it, right? The ETF is hitting new players that weren't buying Bitcoin and weren't buying Ethereum. And so these ecosystems are about building community. And so if you can widen your community, of course you're going to.
And it's true that it has created this new on-ramp. It's brought people into the ecosystem who weren't previously crypto investors. But Matt Corallo put out this post that did a really nice job of crystallizing a sentiment that's been expressed across the industry, which essentially is, does this institutional involvement threaten to undermine the core tenets of Bitcoin? The fact that it's permissionlessness and that censorship resistance.
So I went to the dinner last night, the Coin Center dinner, and in some ways, that is kind of the purest maxi group of people that believe in crypto as a real revolution to overthrow this system that continues to fail them and break, right? And if you think of that core Bitcoin tenet, you know, it's a revolution. I have always been someone who thought, I love those people, but quite frankly, I've seen countries that go through revolutions and they get really, really ugly. And that's not exactly what I want. I started Galaxy to bring in institutions so we could take the best of what crypto is offering, right? Freedom, decentralization, cutting out the middleman, a hard money, but to do it in a way that doesn't break the system. And I think that's the middle path that most Americans want, and quite frankly, that a lot of people in the crypto universe want. Not all of them. And listen, I respect the hell out of the Bitcoin maxis. What I like most about them is, by definition, they can't sell their Bitcoin. And so they just have these bigger and bigger stacks. But they believe Bitcoin's taken over, you would never sell it. And so we don't have a lot of selling pressure from some of the biggest players in the system. Great for guys, great for the system. And so, listen, it takes all, you know, people in the tent to make this work. And I think they've got an important part, but it's not exactly where Galaxy comes out.
So you're a macro guy, and I know that you think a lot about central bank policy, fiscal prudence. You put out this stat that every 100 days, our debt ticks up another $1 trillion. And so my question to you is, what is your macro outlook? And do you think it is as crucial to moving the crypto markets as it once was? Because before, any Fed rate decision would instantly ripple into the price of Bitcoin and other top.
What is shocking to talk about how strong crypto is right now. At the beginning of the year, we thought, the market, not just we, thought 5 Fed cuts this year, maybe 7. And now we've gotten 0, and it doesn't look like we're getting any until maybe September, and if we get them, we're going to get 1 this year. And crypto's at the highs. Think of where it would have been if the Fed was cutting rates, right? Why is that happening? Why are equities happening when rates are staying high? The federal government is spending 6.5% more of GDP than a balanced budget would have, at a time when we've got full employment, right? We are running the most profligate fiscal policy that we have run since I was born. And it's been normalized. Donald Trump normalized it, Joe Biden has normalized it. They have been the 2 presidents that have done more to wreck the finances of your children and grandchildren than any presidents in the history of this country. And the crypto market understands that. Why Bitcoin is a great long-term asset is because we're in an environment when we have a populist president running on the right and a populist president running on the left. And populist presidents don't like to tighten their belts. Joe Biden wants to forgive more student loans, right? I was talking to a Democratic senator today who's on the Armed Services Committee. He said, I don't care who wins. We need to spend so much on the military in the next 10 years to combat the threat from China and Russia and the new advancements in AI and fighting, that just the increased military spending is incredible. Where are we going to get all this money? We're going to keep printing it and printing it. Those deficits aren't going away. And that really is why you should sleep like a baby owning your Bitcoin. Have a little bit of gold and silver as well.
I want to talk about what's going on over at Galaxy. Your wealth management arm has been overseeing the liquidation of all the digital assets in the FTX estate. You guys also were a victim, lost $100 million as a creditor. But I have to imagine that your wealth management business is doing quite well right now. So is this, how are things going on that front?
Listen, one of the wonderful things that happens in America and happen in crypto is we have a bankruptcy code that moves quickly. And it's been unbelievably healthy for the whole crypto ecosystem that our court system moved fast, right? The bad actors of 2021 are in jail or are awaiting trial. And most of the bankruptcies have been cleaned up. We will have helped FTX return over $8 billion to the estate that will then get sent out to the creditors. They will make more than par. That's the expectation. And that money gets recycled into the system. And so, you know, cheers to America in this case, that literally less than 3 years, really 2 years after the debacle, most of the mess has been cleaned up. It's been wonderful to be a part of that. Like, I think we've given good advice. You know, we've been a participant. but most importantly, it's behind us.
I mean, is it firmly behind the industry? So, Binance settling with the U.S. to the tune of $4.3 billion, CZ also facing time in prison. I mean, there are a lot of Wells notices still out there, potential SEC actions, a lot of ongoing litigation.
I think you will see, and this is an opinion, it's not necessarily any grand insight, right? Gary Gensler's time at the SEC is now counted in months, not years, in all likelihood. It doesn't matter who wins the election. Certainly if Trump wins the election, we're going to get a different SEC. But even if Biden wins, there will be turnover. We have a very conservative Supreme Court who already is worrying about legislative and administrative overreach. And so let's assume you're the new guy in the white hat becomes the new head of the SEC. Do you really want to try all these cases against that Supreme Court when we have one court that says it is a security and one that's not a security? There is so much uncertainty amongst these issues where most of the Wells notices, not all, but most were issued. My grand assumption is lots of these cases will never see a day in court.
What does that look like if there is a turnover with Gensler, somebody new is in charge, ongoing litigation?
He's got, listen, we have bureaucracies that are civil servants that don't completely depend on the guy in charge, but the guy in charge has a lot of sway, and he's got to decide, do I still want to keep these cases going? Are we going to win? Right? This SEC has had a far worse one-loss record in court than most. Right? Chairman Gensler has not done great in the courts. Brad Garlinghouse was just out here, and he beat the SEC, or at least he split, with the SEC. And so I think you're going to see a guy decide. And listen, if we get Fit 21 or some version of a market infrastructure bill, a lot of this stuff will be mute, right? You should have known. Well, how should I have known? You didn't give me the bill till afterwards. And so, common sense will take over. It really does feel like this assault on crypto and crypto companies over the last 3 years was one of the most un-American things I have seen. It was politically motivated in my mind, and I don't think it's good for the country, and I think most civil servants and most politicians would believe that. And so it feels like we're stepping beyond that with the rebuff of Elizabeth Warren. And so I'm really optimistic that our agencies, our bureaucracies, and our politicians are going to do the right thing, in the next 3 to 12 months.
I mean, last year at this conference, I was talking to the team at Coinbase, and that's when they were first floating the idea of decamping from the US altogether. It does seem like that narrative has shifted, like they weren't the only crypto firm to float the idea of leaving the US. Do you feel like that phase is over? Do you feel like people are seeing some?
Look, we are fingers crossed, Hail Marys, Our Fathers, and whatever other prayer you want to send up that my instincts are right. But there's a lot of wood to chop to get there. Like Biden could come out and veto this SAB 121 bill, and man, the politics are going to heat right back up. Yeah. I don't think he should. Why would he? He would because his caucus told all those other congressmen and senators to vote against it, and now they're going to feel left out in the cold that, you told me you were going to veto, you told me to vote no, and I voted no, and you changed your mind on me, right? Politicians don't like to do that. And so we'll see. I don't think the president has decided which way he's going to go. My instinct is he'll let this thing stay quiet, and it will, that law will be wiped out, and we'll see movement. But there's a lot that has to happen for people to say, hey, the water is safe. I think it's getting safe. I think it'll be safe in a few months, but it ain't so safe yet.
How about for your business? I know that the talk of going public, was something that was floated. I know that Circle's talking about it. Bullish. I sat down with Lynn Martin yesterday, and she said IPO market's heating back up. We welcome crypto applicants. Where are you guys landing on that right now?
We unfortunately didn't get our paperwork and accounting done during the last administration's SEC, and have been trying to go public literally since the very beginning of the Gensler-Biden SEC, and have had a very long and arduous time.
And it's expensive keeping that going, paying
We have spent probably over $25 million in this process. I would say that in the last few months, there has been a body language and an attitude shift of the people we work with at the SEC, and it feels like the process is being accelerated. Again, we won't know till one of us gets public. Bullish, the company that owns this conference, I think is in that process. Circle is in that process. We're in that process. Lots of companies are signing up. And so some of that was they really were trying to clear up all the accounting issues. And some of that, I think, was just we're slow rolling, whatever it was, Operation Choke Point, and the SEC was part of it. That feels like it's ending. And so we are hoping that this year we become public. If it's not this year, it'll be early next year. But it's been a complete and total disadvantage not having access to the world's greatest capital markets. The liquidity and depth of the US capital markets make every other country look like a backwater pond. We're in Canada, we are grateful for the Canadians to having let us go public, but the markets are tiny compared to what we see in the US. And so for our company to be the company we want us to be, we need access to these capital markets.
If the industry would hinged on just these spot Bitcoin ETFs, you wouldn't be at this conference. You wouldn't be building out your team in the way that you are. My question is, what are you working on to support the digital asset ecosystem long term? And what does your company look like in 5 years from now?
Listen, in 20 years, right, you would expect much, much more of what we do to all be on chain. And so our biggest initiatives now are on-chain initiatives. The bulk of our business, the bulk of our clients aren't on chain, right? And so an institutional crypto company was always somewhat of a bridge. These bridges can take 30, 40 years, 20 years, 15 years, but we are moving from an old way of doing business to a decentralized on-chain way of doing business. It's not going to happen in 3 years, 5 years, or 10 years. And so our growth areas are often what we think the future will be. That doesn't mean we don't try to prosecute and grow the traditional businesses as best we can.
So T+1 was rolled out this week. It, clear sign that the SEC is looking to speed up the markets without the help of blockchain. And we have seen asset-backed bonds put on chain as native assets. But my question is, how close are we to actually tokenizing public equity? Because that would be potentially transformative, on the scale of trillions of dollars, if you're messing with the prime brokerage ecosystem.
And so I think, there was a saying, people go bankrupt really slowly and then really quickly. The tokenization game is going to happen really slowly, and that's the phase we're in, and then it's going to happen really quickly. And I don't know if it's next year, the year after, or the following year, but it ain't 10. And it's why, quite frankly, our competitors, if you go to Citibank or Goldman, they have big investments in crypto right now, but it's all around tokenization and getting ready. And so you need wallet infrastructure, you need a lot of the same rails that crypto operates on, tokenization is going to operate on. And so that's going to happen. That's the real big 10-year chapter. Right now, they're experiments. We're going to announce a really fun tokenization project next week. Keep your eyes or your ears open. There have been funds been tokenized. Apollo has been getting into this business. And why does Apollo get into this business? There's this giant credit shop that makes a fortune. Now they've got this new industry because that's how these things start. They put some money in, they tokenize some of their funds, they try to understand what blockchain to build it on, how do you do this, because that's where the future is going.
So, former Goldman Sachs, now at Galaxy, you know these two worlds. You talk to folks on Wall Street all the time. You talk to institutions. What are people talking about? What's the next? Outside of tokenization, is there something else that people aren't? Because the entire dialogue has been dominated by the spot Bitcoin, spot Ether ETFs. What are people not talking about yet that everyone behind the scenes at cocktail parties or whatever are excited about?
So, what are the three use cases right now of crypto and what's coming, right? So Bitcoin as a store of value, I think every TradFi guy and crypto guy I know kind of checks that box. Yes, it's over $1 trillion asset. People own it all over the world. It's one of the most widely distributed assets of all time. It has become value. You can call it, everybody but Jamie Dimon and Elizabeth Warren is starting to say, hey, there's value here. And so that is a good anchor to our whole industry. The second biggest part of our industry has been speculating. And people say, well, that's a bad word. Wait, Las Vegas is an amazing industry. Macau's an amazing industry. The casino, the lottery is an amazing industry. Sports betting is one of the fastest growing industries in America. Crypto, as a speculative platform, has been a really profitable part of our industry. And so I don't want to dismiss that. I think it's important because it's helped bring capital in, it's helping us grow. But the most useful side of this industry has been payments and stable coins.
Yeah.
And in America, right, we all have Apple Pay, it works really well, so we're not using them as much. But overseas, the stable coin business is booming, right? One of the best businesses in the world right now is Tether. They're making $4 billion a quarter.
60 employees.
We are seeing all kinds of innovation in payments, and that's going to start trickling into America as well. And so I think payments, and then all these other utilities, again, they're going to happen slow until they happen fast, right? I had lunch with Yat from Animoca. The guy's a 10 out of 10. And you start hearing about all the stuff they're doing in Web3 in these gaming communities and how fast they're growing. And so Web3 gaming is not going away, it's going this direction. And I think you're going to see more and more of these little, you know, what look like gardens explode into big gardens and then starting looking like forests. Again, this is not going to get built over a day. It's going to get built over a decade. But what I am positive, much more so than I ever have been in my entire, whatever, 12, 13-year crypto journey, is that investing in the future for us, right, we're 500 employees, it's easier for me to invest today than it was a year ago or a year ago. The idea that this is going away is no longer even a reality, you know, even a speck of reality. These businesses will be bigger next year, they'll be bigger in 5 years. It's going to be hard to navigate, right? There's a ton of competition. And so for us as a company, we need to execute, we need to hire talented people, we need to be smart. But if we fail, it's going to be our own fault, not because, oh shit, I made a bad bet on the industry. Like, the industry bet has been, in lots of ways, de-risked. And now it's the talent bet.
Mike, thank you. And thank you to everyone who joined us today and to the team at Consensus.
Thank you, guys. Oh, my foot fell asleep.
Thanks, Mike. Good job, man. Thank you. Thanks, Mac. Hey, everybody. It's me, Zach Seward. I'm going to close out my involvement on this stage today. Thank you so much for being here. We're going to take a 15-minute break, and then at 5:15 on the dot, we're going to go live with Robert F. Kennedy Jr., the presidential candidate, on this stage in conversation with Consensus Chairman Michael J. Casey. Should be very interesting, and obviously some big news is breaking in the world of politics. So thank you so much for being here. We really appreciate you being here with us at Consensus, and we hope you enjoy this last session today. Thanks a lot. Bye.